Good morning, everyone. Welcome back to Morning Markets on Wednesday, the 10th of June. A couple of things that, as a team, we've been discussing this morning that I wanted to share. The first of which was just thinking about how bond markets have performed over the past couple of days. And you'll be aware that we've been talking about the strength that we have seen over the past number of weeks in equity markets, a degree of rotation. I thought it was just interesting to look at the sovereign bond market, particularly in the US this morning, where we have seen US 10-year yields come into 82 basis points. If we just cast our mind back to Friday, they touched an intraday high of around 96 basis points. So if some 14 basis points move, or a 14 to 15% move. So quite material, and something that I suppose we tend to forget when we're thinking about movements in very small numbers and numbers sub 1%. But again, it is material. Why was that yesterday? Well, we saw a degree of movement in a negative sense within the equity market. We saw equity markets in UK and Europe come off 1 to 2%. A similar picture, not to the same extent, in the US, with the S&P down under 1%, and the Nasdaq itself was actually up on the day. That was driven by technology, and indeed the US performance relative to Europe has been supported by technology. That's a longer term trend, and again it was evident yesterday with both Amazon and Apple hitting new all-time highs. So it just gives you a sense of what's been happening in two different areas of the market. Bond market, where we see strength, as the equity market weakened off ever so slightly. I don't think that's anything surprising. Nothing really ever goes up in a straight line, and some profit taking was also evident in those more economically sensitive sectors that have performed well over the past month. Indeed, those sectors, if we look at transport, we look at some of the financial sub-indices, they've returned some 17 to 20% over the space of the past 4 weeks. So material gains and maybe a little bit of profit taking coming in there. I think I take a step back from that and think about what are the four key themes or factors that we've been thinking about that are important to sentiment in the market at this point in time. And that's fiscal support, monetary support, what's happening around COVID in terms of mortality, infection, and then the medical advances that are being made. And then the fourth factor is around the reopening of economies. And if we take a little bit of a step back from the day-to-day movements in markets, has any of those four factors changed significantly in the past 24 hours? I would argue not. We've seen and continue to have evidence of economies continuing to reopen. We get further indication of what's happening within the UK yesterday, and that will be continuing to evolve over the coming weeks. I think the other thing that where we get some information, partial information, is around monetary policy, and that will come from the Federal Reserve when they provide their statement and forecasts this afternoon, US time, evening time, the UK. And that'll give us an indication of how they're thinking about the ongoing evolution of monetary policy. I'm not expecting any significant change from that. Why do I say that? We're in the very early stages of the reopening of the US economy. That's not to say that the market won't react to what they say. Why do I say that? Because we've seen the positive performance of the market over the past number of weeks, and maybe that's indicative of an expectation that the Fed, the FOMC are going to do more to support the economy. That's something that we'll find out and will be evident from the market reaction this evening. Other things that we were focusing on this morning was looking at some of the economic data that's been coming out from a number of economies. And a couple of things there that I wanted to draw to your attention. The first of which was consumer sentiment in Australia. Yeah, I've placed very far from the UK, but something that I think is really quite interesting to observe. Sentiment there has returned back to levels that it was at the beginning of the year. That's following the very significant drop that we saw in the midst of COVID-19, but then a significant rebound. That's interesting because of how Australia as a country dealt with the issue. They closed down relatively early, took aggressive action, and are now coming out the other side. That may suggest a model for other countries that have been very aggressive. When you look at New Zealand, similarly, that's an economy that has fully reopened again. The other thing that is just observational, but it's in South Korea. I think South Korea is one of those markets that has really used technology and showed the advantage of technology in trying to tackle COVID-19. What have they done with their track and trace program? It's continued to grow and evolve, and now they're using QR codes, so those codes that you scan when you go into a building to open something or to get information, and they're using that to use that to get identification of the people that have been in certain restaurants, pubs, nightclubs, etc. So again, using technology to aid in the fight against COVID-19. And then on the economic front, we had inflation data from China today. Again, that just illustrates the falling trend of inflation that we've seen over the course of the past number of months, with producer prices in the negative falling 3.7% year on year. Consumer prices, they increased about 2.4% year on year, but again, that's falling about 80 basis points month on month. So no signs of inflation there. And that will be an important thing for us to observe over the coming months. Does inflation start to pick up in China? Does it start to pick up in other economies that are reopening? And how does that feed into the economic process that we're ongoing in terms of recovery, price changes, and what does that mean for economic policy? That's it for today. Please join us again tomorrow. Many thanks.